20% played out today, guys. Unfortunately, we finally hit a red day, and I'm gonna go over the trades that led to this red day and any ways you guys could have also improved if you were trading on this day. But without further ado, let's get straight into it. So here is my trading view. Here are the trades I took. All right, there's a -1, had a break even, and another break even. Unfortunately, both, like I said, I could have managed to stay better to end green, but I kind of stuck to my system, except for maybe the risk reward or targets here. But let's go and replay real quick so we can show you guys this exact date here. So right here, this was on Thursday, October 9th, okay? And the first setup here was very straightforward. So let me just mark out real quick open. So opens at 9:30 right here. And by the way, before I get into the trades, when I said the 20% played out, I'm talking about statistically based on my back testing and live trading results and data. 20%, 15 to 20% of my days end red. All right, but they are very small red. So like usually -2, -3 on my red days, but my winner or winning days are usually 6, 7, 8 plus risk reward. So they do make up for these small red days. All I need is one green day to basically make up for multiple red days. Anyway, that's with that out the way, because some people might be wondering, what did I mean by 20%? If it was some secret number or something, but no, there's no secret to it. It's just statistically going off my data. Everyone's gonna have different percentages, but I do recommend you have to track the percent of green days versus red days that you have from your back testing, because what this does, it helps you set realistic expectations so that when you do go start live trading, whether it's prop firm or personal account, it doesn't matter what you're trading. What matters is basically you need to understand your system enough so that when you go face these red days, you know it's normal. Let's say your back testing data shows you are red 50% of times, right? Which is very possible. But your green days obviously make out for it because they're much bigger, just like mine. But let's say 50% of your days are red. Well, when you go into live trading, you should also expect the same thing. Just because 50% of your days are red when you're live trading, now you know and accept the fact that's normal. You have to understand what's normal and what's not normal and what's out of proportion. What would be considered out of proportion? Well, if you backtest, let's say only 20% of your days, kind of like mine, and red, and when you live trade, let's say it turns out to be 60% of your days and red after, let's say, a few months or a whole year, this is a very big issue. This is a no-no because this doesn't match backtesting data. So having these realistic expectations when you come into your live trading and understanding your numbers is very crucial. Now let's go over some of the setups on this day I took. So let's go on the higher time frame first. We had two breaks to the upside here on the higher time frame. All right, break structure, break structure. We actually had multiple, even had some above here previously, but the closest ones I've seen here so far has been these two. All right, nothing out of the ordinary. Now you can see obviously on the lower time frame, my long was up here, which is in premium of, well, the higher time frame leg. So if we go to like the 1 hour, I already marked it out here actually, but basically you see I was longing in premium here. And what was going on in price? Well, price was consolidating up here in premium. When it consolidates like this, it's going to break out. And it's either going to break out to the upside or downside. We don't know, but usually if we're bullish, it will break out to the upside. Unfortunately, it did not today. Not today, October 9th, which is okay. And I took a loss here. Now, there is a way to avoid this loss here from my perspective. And all it is understanding that on the higher time frame, sure, I'm in premium in that we are or have already been consolidating up here. So maybe it is less wise to be taking this long here. Nonetheless, point is I was okay, to take this L right here, and it is what it is. After that, I was looking at PYs. You don't want to spam entries after entry after entry, guys. Remember, if you're spamming entry models, you're going to take an L here and L here for no reason. I go to the higher time frame, 1 hour, 30 minute, 15 minute, cycle through your time frames. All right. And what I see, well, I see this is the 1 hour PY, which also aligns, I believe, on the 15 minute. Yeah. So this is 1 hour demand because we have huge 1 hour imbalance. People trading at fair value gaps, they're getting cooked here because they're probably longing within this gap here. I don't long within gaps, guys. I long or short into these gaps, and then long or short once they get fully covered or mitigated. And so once we reach the mitigation point of the 1 hour PY here, well, it's another loss here, unfortunately, just because of the entry model here. This was my IFG entry model. I'll hide my indicator here, so everything's more clear. I should probably do that more for future trade recaps and videos for you guys, so things aren't cluttered up and all that. But if you want to get access to indicator, click the link down below. All right, it is on my website. You can get access to all, I believe it should be a total of 7, including this one, indicators that I use on a daily to print money in the market. But point is, that's where IVG here, because bullish candle, internal pullback. This is the internal leg here. This is extreme IVG, net internal leg. Took it and took an L. Now, things I could have improved in this, maybe refining my POI. There's a POI here, POI here. So let's see what would happen here if these got hit. Anyway, this one did get hit above, so I couldn't have avoided that loss. However, if I did set a rule, for example, for just an example, again, you guys have to backtest your own system. I teach you guys so many of these concepts and things, and also teach you my specific system. But you can also make your own variation of my system that works better for your brain. Because what I've noticed from so many of the students I've taught in the mentorship program specifically, since those are students I work one-on-one with, I realized certain setups just work better for certain people. Like it clicks quicker and they're able to execute better because of their psychology just matches that setup. For example, the stop runner setups hit TP usually quicker. The main setup usually takes longer to hit TP because, well, you're trading literally this bottom or top ticking of a reversal of a new trend. So sort of things like that. I might sneeze, but bear with me. You can also add a thing where, again, like I said, high timer PYs, we tend to get internal sweeps. So you wait for this fake out here. Don't take this -1 like I did. And you just take the next setup, which is another IFG here. So I'll draw it here real quick for you guys. There's the IFG. And we close body, close above. And your stop loss, again, you can have a few ticks below the IFG inversion or have it the low. But for me, at this point, I couldn't find really any structure candle-wise to really put my stop loss here below. You could have put it below here, but at this point, might as well put it at the extreme low. So yeah, had it there. And my target was just a little far on this day. I was targeting the 5-minute time frame, which also is aligned with this POC. So if we just go back here real quick, so it's easier to see and switch time frames. Where's the line I drew? I think I'm losing my voice here. But point is, here's the 5-minute mitigation here. And I think that was a POC I drew. No, it's not. Sorry, that's a different POI. Price reacted off this, but 5-minute supply below here. Instead of the 5-minute supply, I was targeting both times. I was kind of anticipating for the market to go higher here. So do something like this, mitigate this maybe. That's why I took the second trade here to anticipate this happening. But ultimately, it did go lower. And I think it took out even the low. Yeah, it took out this low that made the high. So it is what it is. It took out that 1 hour low. But once you do take out that 1 hour low, you can look for a trade obviously to the upside. Now we did chop around a lot here. So I don't know how you would have traded this. And this is also later in the day. And like I said, trading outside kill zone, you come towards the risk of a higher chance of having choppy markets like this. And choppy price delivery. It is what it is. And you know, the best trade of the day would have been shorts here. Basically at open. But I tend to focus more on pro trend than counter trend. So I would have missed likely this move here off this mitigation and sweep. But yeah, both sides, both times it basically failed. If I was to critique myself trading on this day, nothing really I can do here to critique, to be honest. Because my draw would have been still here anytime, any day. Now my inducement here, I didn't factor in. There's this mini inducement here, which could be inducement for this PY here. And also didn't factor in, I believe at the time, I didn't look clearly to this 5-minute supply. And I believe it's because of 50%. Let's see. So I guess not. Okay. This 5-minute supply was technically in premium, but I mean, I was still bullish bias here. And so if you're bullish bias, these should be getting ran. Supply should be getting ran. It could give a mitigation cycle, which is okay, but this low showed hold and it should get ran. Unfortunately, that didn't happen for either trade, obviously, here. And so it took, 2 hours, break evens basically back to back. So I was in this trade. Yeah, I'll just replay it so it makes more sense to you guys here in live market. Entered there already. I was in this trade. It came back here. Once it came back here, it got hit break even, and then I wait here for another entry model because I'm seeing mitigation cycle here. So I got my OB entry model again. You could have also taken this IFUG here, up to you. And this one hit break even. Because when we do get mitigation cycles, guys, we have to here break above this high here, because that's the point of the mitigation cycle. We should not be holding supply. So this PY, or you can just mark this entire thing, starting from this PY, this should not hold. And because I'm anticipating this should not hold, ideally price shouldn't even come out to my break even. It can mitigate this, but it's not going to hit my break even here because the PY is like above my break even. Sometimes it does wick, but I'm more cautious about that. Especially since my entry was so good here, I was feeling very confident that if price did want to go higher, it shouldn't be going this far deep. We should be pushing. Ideally, we should be pushing off this stop hunter here, matter of fact. Now, this isn't a big range, not ideal situation to play stop hunter anyway, regardless, but like I said, this shouldn't have such big of a reaction here to get another mitigation cycle. Usually, we don't get two, I'd say, back-to-back mitigation cycles. It does happen sometimes. Anything can happen in the market, but usually, like, this should not be creating another mitigation cycle. It should be breaking above that high. So I went break even here, and as you can see, it later just hit my break even. And at this point, I'm not re-entering, right? Again, talking about spamming entry models, guys. You don't want to just be spamming entry models because I got proven wrong twice here. All right. I wouldn't say proven wrong this time. Actually, it hit my break even and it hit my stop loss. This low got held. This low also got held here, technically here too, but proven wrong as in this PY did not hold. Right. And we already got another mitigation cycle. I want price to break above this high, not hold the supply. So because of that, it's low probability, and I didn't take this. Now, I ended my session here personally, because at this point, basically the next setup draw would be the lows here, but I just ended here. It felt like to me this might be a day where I don't want to go on tilt or anything. I usually don't go on tilt too often, but on days where it price does trend in one direction, I do find myself, there's a high chance I might make some emotional mistakes. So I stopped myself here, but you can see you could have taken the stop hunter setup here. This bullish candle here, pullback, stop hunter, covering prior mitigation or covering mitigation if you want to be safer. You still got three risk reward here, and your target is just the low here. So I could have turned this -2R red day into a positive 3R day by taking this almost full risk reward, actually, taking the stop hunter setup here for 5.6 risk reward. But I decided just to end my day here. It's just a complete personal choice here. But yeah, there's a stop hunter setup. Again, if you don't understand what the stop hunter setup is, click the link down below to go to my website and check out the 100 course, and you can learn all about this setup. There's tons and tons of examples in the course going over candle examples of stop hunter as well as drawings, and of course there's a full-on like 1 hour almost back testing session on the setup proving it's profitable. But anyway, hope you guys do enjoy today's little trade recap. If you guys did enjoy, make sure to leave a like, comment, subscribe. Let me know what type of future videos you guys want to see on the channel. I'm mainly honestly from y'all's feedback you have given me for the past few months. It seems like you guys really enjoy trade recaps, so I'm going to keep posting trade recaps. I'm not going to stop those. All right, the bootcamp was all right. I have 2 beginner stuff videos or bootcamp series on my channel already for those that are completely new. If you're completely new to trading, I'd recommend you go towards to watch the beginner stuff first before you jump into trade recaps, because the trade recaps can be sometimes confusing if you don't even understand how to read a candlestick chart, for example. But that shouldn't take too long for you to adapt. Usually it takes a few hours, and once you're used to it, you can read candles. But hope you guys do enjoy. Like I said, leave a like, comment down below, subscribe, and I'll see you guys within the free Discord server. Peace.